Hey guys, Mike here. Oh boy, what a day in the market. My goodness. I mean, I don't know if you were paying attention in the morning what happened. We had this unbelievably hot job report come out. Oh, the market's like, oh my goodness. But then what happened? Right? We're going to get into the charts and show you exactly what happened and buckle up because boy, it is a roller coaster for sure. Then we're going to get into the charts. And then we're going to get into stuff at the end that's absolutely showing what is fueling this rally. And it's pretty crazy. I didn't think we would break this mark for a number of years, but we've already broken and it's absolutely insane. But, you know, to keep things in perspective, because people are like, I don't know what to do here. It's like, understand, I put this in the Patreon last night and all these charts, like 19 to 25 charts somewhere in there. And it was showing on all these RSIs, right, in the overbought territory. And you can see, I'll just read this to you. To keep things in perspective, right now there are currently 2,210 stocks and ETFs that have reached overbought on the daily RSI. Some are extremely overbought. That would be Meta as one of those. Not only that, but some of these companies are reporting earnings within the next 3 to 5 days. Or coming up this week, they will be reporting earnings going in there into the earnings most likely already overbought, right? And the key here is it's not just tech, but travel, banks, transports, and retail stocks are included. Just look at Target's RSI. It is clear some money rotated out of Chinese, healthcare, and energy stocks into these sectors to push them up to this point. And so it's good just to keep that in perspective. You're looking at some of these stocks and everything. You know, stocks have pullbacks. It happens. Contract, expand, you know, and just, you know, try to look at that and think, it's a good point to buy here when the RSI is at 90. Both fear and greed indexes that I know of are extreme greed right now. Maybe, you know, we can continue to go higher for sure, no doubt. But, you know, I don't know. For me, I think if I'm looking at a stock and I'm looking at that RSI that high, I'm like, I think I can get a better entry point here. There's a good chance of that. You know, who knows? I mean, this has been a crazy rally. Maybe it keeps going, right, for that particular stock, but just keep that in mind. And there was a couple of things. Obviously, the market didn't like what, in a way, Apple and Google and Amazon had to say. I mean, the earnings were not good. Even Apple's weren't good. And we're going to get into Apple because that is just a stock. It's a bulletproof stock, it seems like. Nothing phases Apple, okay? But the other thing was the job report come out this morning, and it was probably the hottest jobs report we have seen. And it came out and shocked the market because it said they created 517,000 jobs versus the expected 193,000 jobs. So 2.5 times as much as they thought it was going to be. And the unemployment rate dropped again to 3.4%. And here's just another thing to add to our list that most of us hadn't seen in our lifetime. An unemployment rate that low. It hasn't been this low since 1969. I mean, that is just incredible. So when you think the Fed keeps raising rates, supposed to slow things down. Nope, job market says I think not. Does the report seem fishy? I mean, that's pretty dang hot, right? But again, they do all these seasonal adjustments and everything else, you know. But again, so you got unemployment rate dropping, more job openings out there. I mean, it's just insane to me. And you can see what the market, check out what the market did. This is, I mean, just nuts. I'm going to show you why. But look at this. Big drop down, but guess what? Nope, here comes buy the dip crowd, scoops it right up, closes the gap on the S&P perfectly, and then what do? What we've seen multiple times, sell off the rest of the day after lunch, right? Just tank after lunch, and then you look up here, and this is what I'm talking when I say buy the dip crowd. This is basically what's in. Anytime lately, since probably mid-January on, anytime you get a drop, you're getting the bounce. Drop, bounce. You look, they're closing the gap almost perfectly. Right, when you get this. And so, I mean, it's insane how many times this has happened now, but this is what is in style. Every dip is getting bought up. That's just the way it is. And that's today's right there. And they close the gap perfectly, and then they sell it off, right? Talking about a trader's world there. But then, you know, look at Apple. This is the bulletproof one. I mean, look at this thing. It drops, but look at Apple. Green on the day, even when all the indexes, probably, I don't know, 80% of the stocks are red. Not Apple. Apple don't care. Apple shoots right back up and trades sideways. And this is what to look for. I'm talking about maybe looking for a pullback. You know, this is a trend line right here. I'm looking for to see if we get a nice healthy pullback to retest it. And I think that support level, and so I know that's what I'm looking for, is a retest of that trend line. And most likely, I think what you're going to see is that double top would be support now. And that trend line intersect, and then you see if we get a nice healthy bounce, or does it fall through? Because if you look at a lot of the Chinese stocks, that's what's happening, right? They had a healthy trend line where they're just bouncing up, running up fast, and all of a sudden they're starting to break those. And you can tell people are just rotating money out because they're so far up in those stocks and trying to rotate it into this move, you know, to get as much of it as they can. And so that's pretty obvious when I was looking at all the charts last night. And then another one, I mean, Tesla. Good Lord, look at Tesla. This thing gaps down like everything else, but then it just takes off like a rocket ship, right? But then again, what I tell you, I said, remember, it ain't getting over 200. They ain't going to let it. And you can see there the right. What was the high? 199. Did not let it get to 200 and whine as simple as can be. There's that 200 call wall. This happens. Doesn't work for all stocks, but it was just like that 100 put wall it put up. And that's what I'm talking about. Now, here's a good thing. Looking forward, you look at, today was weekly expirations, right? Next week is going to be where you still have a 200 call wall, but to be honest with you, when you look at the number, it's only like a third of the contract so far, right? And if you can get through that, what do you see after that? Not much. And then the week after that, look at this one. Man, you get past 200, all of a sudden, there's nothing really there until you get to 220, right? And so that's a huge gap. And so a lot less resistance in my opinion. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And so again, always look ahead to the next week. But also this right here, as I was telling one of the members and they're asking about this, this is just one tool. You got to take this and coincide it with certain things. So if you know, for example, when Tesla had the 100 put wall up, right? And if you're looking to do options, you can use that as one of the tools for sure. What else could you use in that case? Look at the RSI, how oversold it was too. And you're thinking to yourself, man, it's really oversold, waiting for a bounce, got this huge 100 put wall up. Are we really going below that? No, right? And so you could use it to buy options or sell options or whatever you want to do, but just, or buy the stock or sell the stock. So, it's just something to keep in mind. It's just one tool to put with others, all right? It doesn't always 100% work, but with Tesla, it seems to be one of those ones that kind of works. And so that kind of leads me into a couple of things that came out last night and this morning. And it's what is helping fuel this rally and just keep on fueling this rally, right? And first is, I guess, I told the members, I guess that 1% tax on stock buybacks don't mean nothing. Because look at this right here. They have already broken the record for stock buyback authorizations. I mean, 131 billion and counting so far. And you saw it, like I remember I told you last year how much was out there right now. And they've been buying like crazy. And then the other one is us. Look at this. Retail broke the 2020 record now as of yesterday, I guess January, and now make up 23% of the market volume, which coincides with smart money and the dumb money confidence indicator here, which you see dumb money still buying, which that's what they call retail investors, and then smart money is still selling. And so we are definitely helping fuel this rally, that is for sure, which is why you're seeing like the Carvanas of the world and, crap coins that have no business being bought up, just getting bought up like crazy because there was a lot of money on the sidelines anyway, right? And then these stock buybacks, I mean, they're just so, you can imagine how much Apple's bought this month, or actually I should say in January. But, it's just crazy the authorizations that are happening. So I guess that 1%, the tax they're putting on it, they don't care. Whatever. Tax as much as you want. We buying back because they make a lot more money. I mean, remember, who's the number one beneficiary? The stock going up? Not us. Not even hedge funds. It's the executives, right? They're loving life. The founders and the executives and the board. They're killing it. So hey, we'll be more than happy to. We'll pass that on. We'll take away some workers' pay, get a cheaper healthcare plan to offset that. No problem. So it's kind of in a way a dumb plan. I understand what they were trying to do, but that ain't gonna work. So come up with a different one. Anyway, and I'll say this, and I'm going to end it on this. There's this chart going around. It's all over Twitter. I see people doing videos. And I don't think they intentionally try to mislead people, but what they're trying to do is compare the .com to what we're going through now. And I'm going to show you what I'm talking about because they're comparing, here's the double top and here's this, and it looks a lot, and it does look a lot alike. But understand, you can't just look at a chart sometimes. You have to look behind, like what caused this extreme fall on an index, right? Or the whole stock market just to crash down like this, right? And so this is the .com bubble. You got your trend line, obviously. We come down. And then here is this double top they're talking about. See where I'm pointing at? Like we just had a double top, and then we sold off after that double top because it played out. And then we've had this run up, right? And so, of course, in our scenario, we broke the double top, and this one, it did not break the double top. But after this, you see this major sell-off right there, see? To the right, and it goes down a lot, okay? And so that starts around March, April of 2002. And then when you compare it to what we're going through now, this is what they're talking about, right? You have the double top right there. drop down, move up. Obviously, we broke out above our double top here. But what they're trying to say is, hey, we have this major sell-off, right? I mean, it looks a lot alike, and that's true. It does look a lot alike. But here's the thing you got to remember. What happened in March and April and May of 2002? Well, it took about 2 minutes for me to Google it. But what happened was you had one right here, WorldCom, one of the largest companies in the world, filed the largest bankruptcy in history that year. It actually officially filed in July. And what they did was, in June, the month before that, they admitted fraudulent accounting practices where they came up with like $4 to $5 billion in expenses. And remember, $4 to $5 billion today ain't nothing. $4 to $5 billion back in 2002, 21 years ago. That was actually a good amount of money, okay? And so, and the crazy part was, if I remember correctly, it's the same accounting firm, Arthur Andersen, who handled Enron, which was, they filed bankruptcy 2001, right? And of course, right here, the same time frame from like March to July, Arthur Andersen was also charged, right, with fraudulent activities. But remember, they filed the bankruptcy in July. They admitted the month before of the crazy accounting practices. But we also know this was the age of the internet, right, where if you're old enough to remember, there was dial-up and stuff at this point in time. I think it was AOL was the big one. But you got to remember, even before a company officially filed bankruptcy, you know, as you saw with Bed Bath & Beyond and other companies that have filed bankruptcy, the rumors out there months before, right? And this was obviously a huge company, you know, a global company, right? And so, you know, what is the market not like? Uncertainty. So if you got Enron the year before, now this one, both handled by Arthur Andersen, which I think I'm right on that. You know, they're going, wait a minute, if these two are committing this kind of big a fraud, how many other companies are beating these auditors or doing something different with these auditors? You know, and that's what the market doesn't like. So you have to look and go, and I'm sure there's other things, you know, detailing this, but that was a big thing that happened. And when you create uncertainty in the market, as we've seen, what happens? It usually sells off. And so it looks for any reason, especially on something like that. And so, you know, it's good to look at the charts and context. And yeah, could we have some major sell-off? Sure, could, you know, but again, as you see right now, even with, again, there's Apple. I mean, their CEO seemed like he was trying to scare people and didn't work. Stock still went up today, even when everything else was red. I mean, it's amazing, right? It's just unbelievable. And that's where we're at. And I said last night, I'm like, look, if those earnings reports on those major companies, huge companies, can't bring it down, like what? These are what earnings, other earnings going to bring, what other earnings that we're going to report next week or the week after that are going to bring them down, right? These are the big boys. And none of them were good. None of them. And you know, remember, I keep saying this is the truth. It's not about what you know, get from the earnings. It's about, or what you even hear from the earnings, it's about how the market perceives the earnings, okay? And just how they want to paint the narrative. And the narrative is, oh, well, right? It is what it is. We'll look past all this, you know. And looking at that, the way these companies are talking about it, it seems like the first quarter, which we're 1 month past now, is going to be even worse, right? And so again, what is this whole rally based on? It is based on Fed pivot and Fed rate cuts. That's what it's based on. That's the only thing it's based on. You can call it hopium, whatever you want to call it. But we've been through this multiple times by showing the charts. That's what this is. It sure as heck ain't no fundamentals. Have you seen some of the stuff going on behind the scenes? When you look at the numbers, it's terrible. But it is what it is. The companies are like, whatever. In this job market, I mean, come on. Did anybody, I mean, raise your hand, put in the comments. Did you expect 3.4% unemployment on that jobs report? And again, I find it, and at this point in time, kind of fishy. Like, but then again, hey, I mean, financial conditions are loosening. That's just the way it is. But what's crazy to me is, and almost more shocking in a way, is that, you know, Jerome Powell knew these numbers before he ever walked out there this week. And he still decided, and thank you for one of the people that brought this to my attention, I just didn't notice it, that first question he was asked about financial conditions loosening, I didn't realize he just read it off the paper for some reason. I was busy doing other stuff as I was listening to him, but I wasn't really looking at him. And it was scripted. I didn't realize. I went back and watched it. Yeah, he literally just basically read the answer off a piece of paper. And I'm like, so he scripted it. And I'm like, wow, you really put that much thought into it, huh? Where you really didn't say anything. Like, I don't know why you wrote that down. But he made the choice, right? To not get the market back under control, right? To not bring down the hammer on him. That's just the way it is. And so why he made that choice, I don't know. Because he knew these numbers before he ever walked on that stage, right? They get this way in advance. And so that's kind of stunning in a way, but it is what it is. He must have his reasons behind it or whatever. I don't know. But let me know what you think down in the comments. Anyway, I'm finna get on the road. Hope you guys have a great weekend. I'll see you Sunday and, another adventurous day. And we'll see what the week's up against, because I haven't even looked at earnings next week, or any kind of economic data coming out yet, because I'm going to worry about that Sunday. So hope you guys have a good one, guys.